maybe you've been hesitant on doing it, or you didn't think you'd qualify. Again, there's no sweat off our back to at least go on the questionnaire and fill out your own personal information, because we've helped 50,000 businesses. Not every single one of them are the same business, right?
Another week of wealth webinar. I'm so excited to have you all here. We're about a 124 now and climbing, and I've got a friend and a guest that has been on before and had just tremendous success with this. And the best part about when Josh, our guest today, has success, that means a whole bunch of you got a lot of freaking money. So when we say a guest comes on and has success, most people's minds go to, oh, they must have sold a bunch of stuff. No. Josh's success only happens when you all get a whole bunch of money. And I know all of you love when we have guests on that just show how to put money in your pocket. But today, that's what Josh is going to do. He's going to show you business owners how you may have left some money, back at the government. Maybe you need to collect. And I'm probably saying that wrong. I got a lot to learn from this, because this is something I didn't do initially that I also need to do, because I left the money. It's kind of like when you leave your job, folks. You get fired, or you're like, hey, boss, F you, I'm out. And, you pack up everything. How many of you leave your money at your old employers? The old 401ks, you leave that money there. Well, we're not talking about 401ks today, but we're talking about something which all of you business owners should have known about, but I don't think it was widely publicized. And I guess I kind of understand, because, hey, Josh, correct me if I'm wrong, but if people don't collect this money, who keeps it? Who gets the rest of it?
Yeah, it just goes right back in the system, right back to the government.
So how many of you want more money to go back to the government? Say I in the chat. We better get some darn crickets, folks. None of you want more money going back to the government. You want it going to you, to your business. And I will say something from the economic reports, and I'm going to do the intro for our guest today. The economic reports that I've been reading recently talk about when an economy slumps and the government or the Fed prints money, what is the most successful way to distribute those stimulus funds or those printed dollars? So the study went and said, all right, if we give it to the individual homeowners or the individuals of the country, we give it to our citizens, what happens? So we got all those stats. Or if we give it to the banks and we let the banks distribute the money and the big, corporations distribute the money, what happens there? You wouldn't believe this chart. So many of you probably think, oh, the economy rebounded way faster and much better when the banks got the money, right? Wrong. It was kind of like that. It was crickets. It didn't. But when the money was given to the citizens, when the money was given to the small businesses, the backbone of this country, you all know what happened, because that's what happened during the pandemic. And that's what we're going to do today. We're going to show any of you business owners how you probably left your money with the government. And we just can't have that. So our guest today is the co-founder of ERC Specialists. Okay, so ERC Specialists is the name of the company, and they're the largest ERC company in the country. They've now helped 50,000 companies and have 20,000 affiliates nationwide. So his background, before he did ERC, he was doing about $80 to $100 million a year in commercial real estate. He's a serial entrepreneur. He does the infinite banking concept, because that's where I met him, is through Brent Kessler. And today, their company has 220 employees. God bless you for being able to manage 220 of them. 6 partners, 220 employees, and the largest ERC company in the world. So folks, put your hands together for our guest, Josh Zigolowski.
Thanks for having me, Chris. Appreciate it, man.
No worries. So I'm going to pin you up there and let you just kind of take over the show here, because you got a lot more to say about this than I do. And I just need to listen, because I need to collect the money from the government that I didn't collect early on.
Sure. Yeah, this is my second time on your show. The very first time was actually my birthday in 21. So it's easy to remember. I always like to talk about ERC on basically how it all started, because people will say, well, tell me about what ERC is. And I like to kind of give what the history, how I found it. It's not like it was a secret by any means, but I'm a serial entrepreneur, like you mentioned, commercial real estate investor. Sorry, I'm getting over a cold, so sorry if my voice is a little deep, but I was a minority owner in about oil business in 19 and 20. And price per barrel in 20 one day was negative like $60 or $80 a barrel one day. Like literally they weren't accepting oil that day in the oil business. And so I had that business out of Wyoming. I'm out of Utah. And we were always trying to find extra stimulus to help combat that business. We did PPP number 1, number 2, we got a state of Wyoming grant. When the PPP program started, ERC actually started at the exact same time, but you can only do one or the other. You couldn't do both. Like you were talking about with the banks, that was PPP was brokered through the banks and they made a ton of money. They made up to a 5% commission on the $500 billion that was put out in PPP money. And that was a loan, technically that was forgiven later. So a lot of people didn't do it because they're like, well, I don't need a loan and I don't want a loan. Then they find out it's forgiven later, like, oh, I should have done that. Well, then fast forward to March of 21, a friend of mine said, hey, you should take a look at this for your oil business. It's up to $26,000 per W-2 employee. It's not a loan, and it's forgiven the day you get it. So I had 20 employees in that business. And so I then reached out to my CPA, which is technically Robert Kiyosaki's CPA, Tom Wheelwright's group. And one of the partners, his name's Casey. I reached out to Casey and he's one of the partner CPAs. And he said to me, he says, you know what, Josh, I bet 95% of CPAs won't do this because we concentrate on your 1040s and your 1120s. This is amending your 941 payroll quarterly report. You need to reach out to like ADP, Gusto, Paychex. So I was using ADP and Gusto, reached out to them. And I'm fast forwarding this, obviously. Reached out to the reps and they said, hey, sorry, we don't amend the quarterly reports. We just do active returns. You probably should call a third party. So I was like, really, man, maybe this is a little too good to be true. So I reached out to a couple of third parties and just didn't feel good about it. And at the time, about a year before, I read the book, Who Not How. So I started running that mindset, said, you know what, rather than trying to figure out how to do this, why don't I figure out the right who's, and maybe we can help people with this. Kind of the same time when the mortgage meltdown happened, I pivoted and started doing loan modifications. And that was kind of my mindset. It's like, well, let's look at this pivot because of this pandemic. Anyways, like you're saying, 6 partners, now 220 employees. It's been obviously a unicorn business, and we've helped a lot of businesses. And basically the program, how it started is there's 2 questions. Do you have 500 employees or less? And if the answer is yes, then did you have a 20% revenue loss? Well, in 21, because no one was really using this program, we were doing it basically if anyone got PPP number 2, because in order to get PPP number 2, you had to have a 25% loss in your business. Over the course of 21, like I said, there's a few different amendments. One of them came out at the very end of the year saying, we're changing up the question. The first question is do you have 500 employees or less? The next question is did you have a 20% revenue loss? Or did you have a supply chain disruption that was nominal to your business, at least 10%? Or were you either shut down based on a government mandate, partial or full? Because of those 2 other questions, it opened up the barn door. Even Forbes did an article in early 22 saying up to 80% of businesses under 500 actually qualify for this, yet 7 out of 10 don't know about it. And that's when you started seeing a lot of the ERC companies now advertising out there. And we do it a lot different as far as it's very automated. Our customers love the way they go through the process. I'm sure there's people even on this call that maybe listened to me back in December of 21 that took advantage of that. When you and I talked about a month or 2 ago, you were talking about I think it was you've helped $7 million in money come through people that you referred. I can't remember the number you said, but anyways, that's kind of ERC and the history in a nutshell from how I kind of found it and end up being kind of a unicorn opportunity for me. And then obviously all our affiliates nationally.
Blown away. I'm reading in some of the comments here, Christy got 500, or she's getting 538,000 this week for her refund. So how do you want to do this? You want to just go through and walk us through how can we do this? If real quick, just all the people that are on here, how many of you have a business that would, and Josh, just one more time, what would be the qualifications for someone to qualify for these ERC loans? Or not, they're not loans though, right? They're just ERC
loan. Yeah, that's what's kind of cool is PPP was a loan that was forgiven later and you had to specify what you're using the money for. This is forgiven the day they get it, and they can use it for whatever they want in their business. For instance, I can tell you story after story, but one that always comes to mind is a local pizza joint. They have about 5 locations here in Utah. And when I met with them, the first thing they said was wow, if I can get this $450,000 you're potentially saying I can get, we've been talking about adding another location or 2. And so what does that do? Technically, that added another 20 jobs per location. So, and that's really what we're trying to do in our economy, right? Is trying to add more jobs. And so with that, they're able to do that. And they're in the process of adding that first location in addition to what they had. So yeah, so you can use it for whatever you want. Coming back to what you're asking about the qualifications, there's a lot of people that kind of get interjected. I saw one of the comments that sometimes happens is their tax professional, their enrolled agent or their CPA says, hey, I wouldn't do this. Now, obviously that's someone you trust, and I always say, don't get upset with your CPA or tax professional by saying no to this or whatever it is. there's other measures that you can go through to get through that. Maybe this is a good example, bad example. To me, it's a good example. If you're going through a divorce, you don't call a real estate attorney to defend you. You call a divorce attorney. We specialize in this. Your tax professional specializes in your income taxes. We don't want to do your income taxes, right? But there's other measures. We met with many tax attorneys who represent both sides. If you go through an audit, your CPA doesn't go to court for you. You get a tax attorney that does that, right? So they do opinion letters. They help you get through in case there's a problem there. However, the easy qualifications with it is, do you have 500 employees or less? If the answer is yes, then you have one or three things happen. Did you have a 20% revenue loss? Supply chain disruption, which in 22 and 21, so many people had supply chain problems. There's a lot of people that made money that had supply chain. They could have made more money, and it's got to be nominal. It's got to be at least 10%, which is very small. And then did you have a shutdown based on a partial or full mandate? And
for how long did you have to be shut down?
Well, that's the thing. A lot of people always think like, well, I was only shut down for 2 months. Well, then you probably qualify for those 2 months. In other words, this is 6 different quarters. Maybe you don't qualify for the other 5, but you can qualify for 1. They always think it's 1 or nothing. You might as well try to get something. There's plenty of people, a good friend of mine got 2 out of 6 quarters qualified, which ended up being like $85,000. And the 3 states that had the most shutdowns, New York, California, Hawaii.
Right.
If you live in those states.
I'm in a good state, man. And all my California friends on here, let's get paid.
Yeah. And that's not people think about that extra qualifier. And so that really helps know that it's not 1 or nothing. It's like you could get something, but you might not get all of it. That's why it's up to $26,000 per W-2.
That's awesome. So I'm just reading some of the comments. So those qualifications are pretty easy. So the people, I'm keep going back to Christy. She got getting a big check. Like, how many people qualified on every level? Is that rare?
I would say about 80% qualify on every quarter, all 6, and to get the max 26 is probably a 1% chance. It's always the average that we have internally is 21,000 is usually the average max if they're able to max it out. Someone mentioned the comments on, different credits with EIDL, stuff like that. This is something that, the bad part of the program is it does take the IRS 6 months to send out the money. So the way we structured it is 2 different ways. We were doing marketing at the first with this, but we were unsuccessful because this is a relationship sale. This is someone your plumber that's up the road from you. People that, your chamber of commerce, people that have businesses, in addition to, because we saw that it takes, 6 to 8 months to receive the check, we don't charge up front. We charge 15% when they get the money. So we wait all the way up until that point when they get the checks in the hand to make sure we invoice them for the money in order to get paid.
That's awesome. It's a lot like what we do with the money multiplier and the banking policies. We put so much work in up front, all the education, all the knowledge, the applications, the underwriting, and then we get paid in the very back when the
Right.
person's policy actually goes in force. It's kind of like you put all this effort and energy in with your team and you get paid on the back end, which I think is just a more transparent type of process. And it allows people to understand that they're not coming out of pocket until the magic happens at the end. I love that.
Exactly.
Now, what about businesses that had no employees?
Yeah, they wouldn't qualify. So
Okay.
Self-employment wouldn't qualify either. It's very specific, and so there's kind of 2 parts to it. That's why we kind of created the affiliate model as well, is like, hey, you might not qualify yourself, but maybe you want to refer someone to us, and we can help them out, and you can make a little bit of cheese from that.
Love it. And then was it dependent on payroll like PPP was? Is that one of the big things?
Yeah, it is. So that's where the max comes into play. That's why we have to get their payroll reports, technically their 941s, their PPP info. My team goes through it and deciphers and comes back to the customer and says, hey, you're approved for $323,042. Do you want us to qualify? They click the DocuSign, goes through it, and then we file it within 72 hours, and then we wait that waiting period for about 6 months.
That's fantastic. So with your company, anything with the government, I remember freaking out. I was sitting in my office at my house during COVID. Nobody knew what the heck was going on. Business was completely shut down, didn't know what the future looked like. And, we had to qualify. We had to go on and do all the PPP and the EDIL. Remember, all the banks were ass backwards. It was a mess. And mine opened up at 11 at night. I went in there and 4 hours later, literally 4 hours later, I was trying to send it and it froze. And I kept having to go back and restart it. So when people deal with the government for stuff like this, a lot of times the reasons people won't do this is because it's just such a pain in the butt.
Yeah.
The paperwork, the reporting, knowing what to do, how to report it. And if you miss one thing, especially here in New York State, my gosh, if you don't dot your I, they will reject it and send it back. And people just
Sure.
don't have time to do that. So is that what your company does, is literally does the hand holding? Like you just say, hey, here's what we're going to do for you. Here's the paperwork we need. And then once, we give you the paperwork, then you do everything else?
Yeah. So we make it very simple. The logistics, the path, let's say, or the journey is a customer goes on our website, spends about 5 or 10 minutes per EIN. So if they have, let's say they have 2 restaurants and they're 2 different EINs, they're going to spend about 5 or 10 minutes, go through questions. And we want them to substantiate their claim, and so we're telling them, hey, maybe think outside the box. So sometimes they think, I don't think I qualify. I always say, do not pre-qualify yourself. Go through the questionnaire. We don't ask for a credit card or nothing. They'll go through it. And then at the very end, they'll say, these are the documents we need you to upload in order for us to do the full analysis. We then get those documents. We go through their questions. We come back 2 or 3 weeks later, and then we say, okay, you're approved for X amount of dollars. Do you want us to file? Click this DocuSign. They'll DocuSign it. We file it. Then we have that 6-month waiting period. A year and a half ago, it was much tougher than it was today. Here's why. About 11 months ago, we applied to have an API within the IRS. So we're able to see transcripts now within a couple of days versus what we had to do before is sit on hold. And we can only ask for 5 transcripts every hour. So by sitting on hold, if you've sat on the hold with the IRS, it's not fun. I mean, literally, it'll tell you like you're 62 minutes in line. And so we had 5 or 6 people doing that every other hour, and it was nuts. So now we have a full API. It took us about, 10, 11 months to get approved. We've had that for about 3 or 4 months. So that makes everything even easier because sometimes it felt like we were submitting it to the abyss being the IRS. Then we'd, get checks back, but we didn't have very much visibility, but now we do. Now we've had that for, again, 3 or 4 months, I think. So it makes it easier for us, makes it easier for the customer. So we can give them instant answers on what the IRS is kind of telling us. But it is the same thing with the government, as they do have this big wall. It feels like they don't want to help. They want to kind of hinder and kind of put you in a bucket of people to, hey, take care of it over there. And then you're first in line and they're pushing you back into that bucket, the crab in the bucket scenario almost. So
I can relate, because in the insurance world, these giant mutual-owned insurance companies are the same. If clients want to get things done and they try to go direct, it can be a real pain in the butt. And that's kind of where, with what we've done, as with Money Multiplier, we've just gotten big with size. So now we got dedicated people. We're like, you need something done? Great. I'm going right to the underwriter. I'm going right to the source. And that's what you guys have done. You climbed to a point where you're helping so many people. You got the direct link. And that definitely is a beautiful thing, especially more so with the freaking government. What about nonprofits? A couple questions asking about that.
Great question. Yeah. So a couple things with this is 501As, 501Cs actually qualify for this. Even Indian tribes. We actually met with a big Indian tribe today that has 26,000 members and over 2,000 businesses that they had no idea about this. They've seen some commercials, but they just assumed, being an Indian tribe, that, hey, that's probably not pertaining to us. And we actually showed them in the legislation that they could get the money for it. And it's actually easier for them than it is as a regular business within the United States, actually. So we're going to help them out. But yeah, nonprofits, we've helped a lot of churches where we've been endorsed by a lot of companies, a lot of associations, like the Texas Dental Association. We were the only ones that the American Dental Association would allow on their platform. Private School Association of Hawaii is an endorsement of ours. The one thing that we did too, because we had a lot of people, it's like, hey, who's this company out of Utah? I don't know if I feel comfortable about sending my tax reports, my quarterly returns to these guys. Who are these guys? So what we did about probably half a year ago is we put our state attorney general, Sean Reyes. He's our active attorney general here in Utah on my advisory board, in addition to Matt Whitaker, which is the former U.S. attorney general. If you watch Fox Business or Fox News, he's on all the time. He's on our advisory board. And so we're always asking them government related questions to kind of stay ahead of this game, because people get worried. People get worried because they hear from their tax professional, the fear of it, and so we always want to make sure we stay ahead of the game. That's why our questionnaire has changed so many times based on recommendations from them that they're hearing from higher up in the government. And even then, we also want to be a company after this to continue to help business owners with what we call newfound money. We don't like to use word free money. We use newfound money. And there's other programs out there. And a lot of us have known this for 30, 40 years. Like, there's grants out there that governments had, but they make it so hard, so much red tape. Like you talk about the state of New York, the government has all that red tape just to get 20 grand. And they make it so hard for you. Well, we have a couple of programs that we're going to continue to help business owners after this with newfound money, that we're going to make it automated just like this.
That's fantastic. I'm just going through these questions here. So I got people asking how they join the affiliate, but I want to get to some of these other ones. What is an EIN and an API or full API?
EIN is your employment identification number. So if you're a business, you have that. Just like personally, you have one, a social security number. So EIN, that's what EIN is. API is, I don't even know what it stands for. It's a IT term just to connect yourself with what an IRS employee sees and what we get to see. And they have different restrictions. As much as IRS will allow us to see, we get to see like everything that it's been received. They've issued the check, all that kind of stuff, and which quarters they've issued, all that kind of stuff. So
here, I'll put the long definition off of Wikipedia in there for any of you that need to know what API is. I same thing. Like when they asked it, I'm like, I know we use it, but I don't know what it is. And I actually have to Google it.
It's the who, not how, right? I only want to know to a certain point,
Love it. Somebody was asking, will this work for a business that started in 2021?
Great question. So they actually have a program in there called New Business Credit. That's what it's called. So one of the questions in our questionnaire says, did you start before February 15th or after February 15th? So in that case, in 21, they started after February 15th. Then they'll say, okay, if you start after February 15th, did you start before September 30th, 2021? So in between that corridor of, I think a year and a half or so. If so, they have an opportunity to get up to $100,000 as new business credit for their business. And like my cousin's a good example. He's a CEO of a hospital in Wyoming. He has a side business. It was like a computer repair business or something. And he started it in like late 2020. And he was like, oh yeah, I looked at this, but I didn't have a 20% loss. I didn't have this. And then I asked him a couple of questions. And he was like, oh yeah, I think I do qualify. I said, well, go on the website. Well, anyways, he ended up getting $81,000 of, again, newfound money. He had no idea that he even had that option to, and I helped out his business, and he was able to get some extra equipment and stuff, but he had a lot of supply chain with computer parts and stuff like that in order to help customers.
It goes back, and how long does it cover for? So like when it comes to the records in that, you're going to need payroll records because this is an employee retention credit. So that means you got to have employees. So a lot of people are asking questions about employees. I guess just like with that, how long did it cover? So, we know when the pandemic started 2020, and then this program kicked in. And this other question, I'm going to lump two in. People are saying that they got PPP and EDIL. If they got that, does that mean that they don't qualify for this?
Great question. Yeah. So one of the things is if you got PPP, you can now get ERC, no matter if you got one. The EIDL has nothing to do with this. The one thing with PPP though, is that we're going to ask in that questionnaire, did you get PPP number 1, number 2, or nothing? And then you put whatever answer it is, and then you upload, and you're up to $26,000 does have a factor on how much you did get from PPP, but we do all those qualifications for you.
Okay, wonderful. How about RRF? Do you know what that is? There's a lot of initials going around here. I'm like, what are all these numbers?
I think that one's like a grant. Yeah, Restaurant Revitalization Fund. So again, part of our questionnaire, we've gone through every different piece there. We will say, did you get any other outside grants? And is it one of these 12 grants? That does affect that $26,000 number.
And what if their company shut down in 2021, but they were affected?
Then the part of that questionnaire says each quarter. What happened in quarter number 2 of 2020, quarter number 3? Again, it's not saying let's do one, or it's either nothing or all. You could just get one quarter. You could get 2 quarters, but you want to answer the questions based on that. And that's what a lot of people are like, man, that was in 21, in 2020. I remember a little bit, but man, it's 23 already. Yeah, technically this program, they extended it out to 25. But I just, more and more people I talk to, they're starting to kind of forget what they were even doing. They remember how tough it was and the hardship they had, but they don't fully remember kind of what happened. And so we do ask those questions, and we'll give a drop down of about 10 different opportunities or options that maybe you didn't think about this, but this could be something that you didn't even think about. And that would then qualify you based on what happened in that quarter on that, specific drop down.
And then is there any deadlines or any sense of urgency for people to get going with this?
Yeah. When we first got going, it was an 8-month turnaround. It's actually funny because I'm part of a golf and country club here in Utah. They were one of my first ones I filed for over 14 months ago. They just got their checks this week.
Wow.
And so I was sitting there literally texting them this morning on how it's going to work, all that kind of stuff, because they kind of forgot about it. But it would end up being like $400,000. So hopefully my dues are covered for about 10 years. So yeah, that's another thing too, guys, is if a private golf course, they qualify because they were shut down. But anyways, so they took 14 months when they first started. They did come down on that turnaround. I always tell people, get it filed, get in line, because the more and more people are seeing this now, especially in the first quarter, second quarter. Mr. Wonderful, he's getting a marketing fee for one of our competitors. He's out there all the time on it now. And so there's going to be a lot more people that are going to be in line. So definitely file so you can be in line so you can get your money as soon as possible. If not, if you wait till the end of the year, it could be a year till you get your money. That's where I think the urgency is.
And it's kind of just, I don't want to say it's free money, but it is kind of free money. So no matter how long it takes you to get it, I mean, you think that country club's going to be upset that it took them 14 months when they get a $400,000 check? Nope.
Yeah, it was literally a surprise to them, because what's kind of stupid with the program is not only the IRS takes so long to turn around, but they still send the checks via post office, snail mail, in 6 different envelopes. It's been funny because there'll be sometimes someone's like, I got approved for 6, but I've only received 4 of the 6. And then we'll have to go back on the thing and like, well, they sent this one, but looks like they sent it to your old CPA from 10 years ago. It's really weird stories. But in this day and age, you think they could just do ACH or something. Nope. It's got to be a hard check and keep the post office in business.
So is it safe to say that the companies that had more employees really benefit the most?
Yeah. The one thing is our competitors, some of them don't work with people, companies that have less than 10 employees. They just don't want to even deal with it. Us, we just said, hey, we're not going to prejudge anybody. We want to work with anywhere from 1 to 500 employees. My best testimonials are ones that are in the single digits. Someone that had 7 employees, 8 employees. So those are my favorites, actually. Meeting with someone that has 100, 200, 300 employees, usually you're going to be, there's like an advisory board, or there's a board involved. And so it does take a couple of weeks for them to kind of give that, nod on the yes button to work with us. But outside of that, usually with our state attorney generals and our national attorney general, that kind of puts us over the top with our competitors, because that makes the board and other associations feel a lot more comfortable working with us.
This is a good question. I actually didn't think about this, but what if somebody that had employees, but they're 1099 or not W-2? What about that?
So they're technically not an employee. W-2 is considered an employee. 1099 is obviously a contractor. So they wouldn't qualify. And the thing is this is not just, the program was put to full-time, but part-timers qualify as well. They're just a different calculation that we have to do on the back end. So one of the questions we'll say is, how many full-time employees did you have? Someone might say, oh, these guys had 900 employees, they don't qualify. Well, 400 of them were technically full-time. The other 500 were part-time. So if the full-time is under 500, it doesn't even matter how many part-times. We worked with someone that had like 1,300 part-times and 200 full-times. So they qualified, right? And they got a huge amount of money. I think 13 million, and it's crazy to me because you're like, okay, I remember sitting in that meeting thinking like 15% of 13 million, like, why wouldn't they just do this themselves? And I actually asked the owner that, who was a friend of a friend, and he was like, because when we did PPP, that took us months to do. This would take us over a year to do. And I don't have this. I don't want my staff over this. I'd rather just, you guys work on it. It's newfound money to us. And then we'll just take it and we'll then distribute it out of what we want to do with our business. But we just don't have the capacity or the bandwidth to do something like this, because it does take about 2 hours per employee to do all the paperwork, and 1,300 employees, it'd take a long time.
That'd be nuts.
Yeah.
Absolutely crazy. I've got about 123 people on here. How many of you have between 1 and 400 employees in your company? In the chat, put I. Let's just see how many of you actually, are. Okay, so Terry does.
Whether you applied for it or not already. I saw some people that already got money. I'm kind of curious as well.
It's a good handful of you. Oh, they're still coming in. Now, just for my curiosity, how many of you have between 100 and 400 employees? Put I do. That's a big company.
Yeah.
Yeah. All right. Perfect. So we got a lot of people, on here that said that they have, between 1 and 400 people. And I know I haven't done this yet. And I'm remiss to say that I haven't, because gosh, you were on here better part of what, a year and a half, 2 years ago, maybe a while ago. And you helped a lot of people. I know that much. And I didn't do it. And I didn't do it just because I didn't have the time to do all the paperwork. But now I've got a full-time bookkeeper. So I think how I'm going to handle this, I'm going to go to her and I'm going to say, hey, I got something for you. You're not going to like it, but I'm going to cut you in on anything the government gives me. I'll give her like 20% of anything that we get, and then she handles it all. So sometimes you got to work smarter, not harder. You know, you
For
give
sure.
up a little, but I'm giving up a little of something that doesn't exist and I never will get because I just won't have time to do it. Let's see, check with the IRS for deadlines. So Drew said, I'm a single member LLC that switched to being taxed as an S Corp in 2021 for the percent revenue drop. Is that looking at your rev from the quarter to quarter basis or annualized basis?
Yeah, so quarter to quarter. Best thing, Drew, and everyone else on the call, that maybe you've been hesitant on doing it or you didn't think you'd qualify. Again, there's no sweat off our back to at least go on the questionnaire and fill out your own personal information, because we've helped 50,000 businesses. Not every single one of them are the same business, right? So, and the same revenue, same situation. So when you go on there and you answer those questions, they'll tell you, like, hey, sorry, you don't qualify, or you do. So you've got 10 minutes out of your time to find out you don't. So you might as well go on there and put your information in and then see if you do qualify.
That's awesome. All right, folks. So there it is. There's the information. We just posted it many times there, but there's the link if you want to set up a call. And I know I'm going to be set up a call and see if this can help. Because I mean, hey, listen, please don't let the government keep your money if you're eligible for this. And all of you that said aye for having employees, you're all eligible in one way or the other. I mean, does it matter if you get a check for 1,000 or, like Christy over what, 538,000, just
That's
take
awesome.
your pick. It's fantastic. It's money you're leaving on the table, and all it takes is a little bit of time. And for me, I don't have time, but I'll pay somebody to do this to get it done. Awesome. Josh, anything else you want to say in closing?
Yeah, thanks for having me on. I appreciate it. And I appreciate, great questions. If there's anything that we can do to help, once you click those links and stuff, you'll see our website. I have a team in place to continue. Whether you're a business or you want to be an affiliate, I know you put both links there. We obviously invite you in. So looking forward to it. Thanks, Chris.
Oh, you're welcome. Thanks, man. Keep up the good work.
Okay. Take care, guys. Thanks.
It was a really good way to spend the first 40 minutes, not even actually about 35 minutes, so that any of you that, like me, that didn't have the advantage of getting in early on when we first had Josh on, because I don't know, things were crazy. Now you got that opportunity again. And I hope you guys use it, take advantage of it. And it doesn't matter if it takes 6 months, 12 months, or 14 months to get the check. The check isn't going to come any other way other than getting started, and there's zero cost for you to do that. But what I thought I'd do is, I have a couple ideas on what we can talk about, but I've never done this. So here's what I want to do in rapid fire. So folks, get ready with your keyboard, because I'm going to put this on all of you. What is something that you all want to learn about? Put it in the chat right now. What do you want to learn about today? I can train on anything. I got some ideas if you guys don't give me something, but I'm sure there's something that's on one of your minds that you're like, oh, I totally wish they would cover this. What do you want us to cover? We're here for you. Funds. Janet, what kind of funds? Do you mean private funds? Funny, I just did a show this morning for a women's realtor group all about funds. Oh, our fund. Oh, you want to talk about Initio? Yeah, we never have talked about that. Okay, and you want to talk about, so Benny wants to talk about whole life insurance, but Benny, be a little more specific. What about whole life do you want to talk about? It's, I don't really want to just talk about the product, but what do you want to talk about with whole life? So how about we start with that? And this is good, Stephen. Like, this is your area of expertise when it comes to Initio. And here's the thing: I've done a ton of private funds. I mean, I've been investors in private funds. I've been, partners in private funds. I think I've done, I don't even know, I'd have to go back and count, 6 or 7 of them to date. Private funds that we've raised for and successfully completed. And this is the first fund I've been a partner in, and I'm partners in it with Stephen and Greg Hurleen and Kent Clothier and a couple others. But this is the very first fund that we've ever shared in the back end profits. And at first I wasn't really cool with that. I'm like, I don't know why. And the whole reason is this, and then I'm going to turn it over to Stephen to really kind of dive into this. We all know we're going into an economic cycle here, and it's a downward cycle. Okay, we're at the end of a long-term debt cycle. We're at the end of a short-term debt cycle. We're just at the end of all cycles, technology and everything. So you can all see where we're going. I mean, banks are failing left, right, and center. You're just not hearing about all the other ones that are having trouble. So when all this stuff happens, it basically presents a massive opportunity. But in order to take advantage of the opportunity that's soon to happen, what you'd have to have is capital. You'd have to have a lot of money, because when the opportunities come, they come fast, and the person with the gold wins. Okay. So what we did is we said, hey, we know we're coming up on this cycle, and we've got some of the best people in the business from an underwriting standpoint to underwrite a deal. We've got so much expertise in Initio from all the different partners. I mean, Kent Clothier, I mean, he's a legend in the industry. I mean, you got Steve Byrne, who his entire career has been underwriting deals. Literally, the guy can be blindfolded and ear-muffed, and he can tell you whether it's a good deal or bad. Greg Hurling, you all know him. I mean, and myself, I mean, I bring a little bit of knowledge to the group. And then you got Steven, so all of us come together, and what we want to do is we want to take advantage of the opportunity. And we're all independently and individually going to take advantage with our own funds, my own IBC funds, but let's do this on a big scale. Because let's just say big opportunities come up that we can take advantage of that I can't do, Steven can't do, Kent can't do. Collectively with a fund, we can. These opportunities might only come once in a lifetime, and we realize that. So we built a fund that is solely for that opportunity. A fund where we can go out there and we can seek these opportunities, and it's difficult because a lot of these opportunities that we're finding are coming to us from people that are in trouble. That's right. That's how opportunities happen. When other people are fearful, you are greedy. So some of the opportunities that we've taken advantage of was because really good real estate investors got themselves in a really tough place because the market shifted underneath them. And because of our ability to come in, we are able to come into these investors and say, hey, we can help. We've got the money, but here's what we want. And then we call the terms. And our terms, to be perfectly honest, suck for the people that we're buying their deals or partnering with on their deals. I feel bad for some of them. I really do. And I hope none of them are on here. I'm not trying to say this, but that's what an opportunity is. Sometimes one person is going to benefit more than that's usually the person with, the person with the gold, if you will. So we've been able to really come out strong this early on. We didn't think it was going to happen this early because we thought we were going to have to wait, which is the other reason why a lot of people are not taking advantage of Initio, because they look at Initio and they say, oh, it's only a 4% pref, which means a 4% interest rate. Oh, inflation's, 6, or before it was 7, 8%. Like, why would I put my money into something that's 4%? Well, if you understood why we did 4%, you'd understand what is on the back end. You see, we did 4% so that we didn't have to be in a rush. So when you raise money with a fund, you have to pay 10, 12%. Your ass is out over the fire every second. You can't have lazy cash sitting around because that lazy cash is costing you 10, 12%, like my other funds. But when you do it at 4%, that's a really easy number to cover. And you can sit on the cash waiting for the right opportunity and not having to, make emotional based decisions because you're worried about covering the interest on it. So with Initio, that's why it has a low pref. It's by design. It's not because we're trying to not pay people a lot. It's because you have to understand Initio is a different fund. It's a fund where you're going to get 4%. So that's like, we'll call that coffee money. But the 4% isn't why you're doing this. You're doing this for the back end. When these deals close out, I'm going to have Steven talk about some of the deals. I mean, we've got a big hotel deal. We got another big builder out in Colorado that we did. I think we just are looking at a new development deal. I mean, we've got huge equity stakes on the back end of these deals. So when they close out, I mean, I don't know, our returns are going to be high double digits. And the beauty is we share the majority of that equity stake with the investors in the fund. So the investors actually get paid out way more than we do as the partners in the fund. So that's the whole reason why a lot of people maybe have shied away from Initio. And I think that's being short-sighted in the way you're looking at it. But I also understand there's other alternatives where people can get 12% interest on their money. I mean, Private Money Club opened the universe of opportunities up. So with that being said, I want to actually pin Steven because Steven is, to be perfectly frank about it, he's way more knowledgeable about what our fund is and how it's working and what we're doing. So Steven, take it from there.
Yeah, I mean, yes, absolutely. You laid it out pretty well, but I always like to talk about kind of the negatives to something first and look at the alternatives and then, the pros and cons and decide which way to go. So for me, when it comes to Initio, everything you said is 100% accurate. People that are looking for those higher returns. I mean, our goal with it is, 16 to 19, maybe pushing into the 20s. Annual returns for it. Now, that's based off of the profits like you were talking about and our ability to go find those time-sensitive, high-profit deals that, they need the money for, which they pop up all the time when it comes to real estate investing. So, where the power of that is we have, like you mentioned, some of the partners in the fund, people like Justin Colby and Greg Hurling and most of those guys out of Orlando area. And you got Kent Clothier, who's just I mean, he's like the Warren Buffett of the real estate investment, turnkey world, his family. I mean, so these people have so much experience and so many connections. And as all of you know, that's what business and money's really all about, is who a lot more important than what a lot of the times. And that's, why we love, hosting live events, doing masterminds and things of that nature. But it gives us the ability with these partners in the fund to find these deals, getting that high profit. And that's what people wanted. So that was one of the reasons for it was, hey, we love the 12%, the 10% deals, but we want to go for more. We want more, but still in a passive way without having to actively go out there and do that. So that was why the fund was created. Now, some of those cons I was talking about, if you're the kind of person that's looking to lend money or invest money and create monthly income from that, then this is probably not for you. Because, let's say you're using a HELOC. Well, if you're using a HELOC, let's say you're paying 6% and you're making 12%. And let's say that's monthly interest coming in. Well, you're going to have enough money coming in to pay not only the HELOC monthly payment, but make a little bit of extra money to live on or do whatever you're doing with it. Or maybe you're just looking to, have in retirement, passive income coming in that you can live on without touching your nest egg. Well, again, Initio is going to provide you chunks of bigger amounts, but it's not on a consistent, predictable monthly installment plan, so to say. So what I really like in Initio Fund, IRAs, qualified funds. So those old 401ks, SEPs, simples, IRAs, whether it's a traditional IRA, a Roth IRA, a solo K, anything like that, any qualified retirement funds, that's perfect, because odds are you're not touching that money anyways. You're just looking to grow that money securely, and you want to do so in a way that's smart, not playing the volatility of the stock market, but you don't need that money coming in on a regular basis. Or if you're using an infinite banking policy, great, because you're going to be paying that interest on the infinite banking policy once a year. So you're gonna have money coming in that you're just going to cover that from Initio, but you don't necessarily need the money on a monthly basis to cover like a HELOC loan, right? Does that make sense? So there's some positives and negatives. So yeah, we're going for the higher returns. No, it's not guaranteed. You're putting your money basically with us. That's what it is at the end of the day, Chris. It's not the fund. It's not the deals. It's us. You're putting your trust into us to go out there and manage the fund and make the right decisions to invest in. And I got to tell you, Chris is very conservative when it comes to some of these investments, because we've already vetoed a number of them that have come to the group, that a couple of the partners were like, this could be pretty good. Maybe we should do it. And, Chris immediately, boom, boom, boom. Nope, no. And it's gone. So that's kind of cool. But so we are staying very smart with it. And yeah, some of the deals we've already invested in a big Four Seasons residence, private residence out overlooking the Vegas Strip in Nevada. Chris and I were out at James Malinchek's house. So if you guys don't know James Malinchek, you should check him out. He was on The Secret Millionaire, an NBC reality show a couple of years back, and one of America's top speakers, big money speakers. And the guy's just a rock star. There's a lot of connections, always hanging out with celebrities and people like that. And we were at his house, Chris and I, for a little private meeting that we had with James and a couple other people. And it was pretty neat because his house also overlooks the Vegas Strip. And right above his house, up on the hill with a 10 times better view, is that new Four Seasons residence that was being built. I actually took some pictures of it. I can show you guys, but so it's pretty cool to see that. And so deals like that, we're doing like you said, the project in Colorado. There's another project, another one in Nevada that we're doing. There's some different beachfront properties that we're looking at in Florida right now. And so different deals like that, but things that are time sensitive, that need the money, that we can get in, we can get a good position because of the connections. And then we can pass all that profit, all that equity, all that money that we make on these things off to you as the investor. And that's what it's all about. So with that said, I mean, I got a brochure, we got a website, I got the documents. I'm not going to bore you with that kind of stuff right now, but if you guys are looking for that kind of deal, just shoot me an email. And what I'll do is I'll email you over all those details. You can take a look at it, and then we'll hop on a quick 5 or 10 minute phone call, any questions you have, and then we'll do it all for you. So we'll send you a DocuSign, everything completed. If you have a self-directed IRA, or you're doing the money from wherever, we'll help you with all that. It's really easy to do. So just shoot me an email. I'll send you over that stuff. We'll chat about it if it's right for you, and we'll go from there with it. But I think it's a great opportunity.
Yeah, I do too. And the minimums are 25,000. So it's a low minimum too, which is what a lot of people like. I mean, a lot of people have had Rob Fuller, they've had calls, but they couldn't do it because it was 100,000 minimum. But Initio at 25,000 gives the opportunity to a lot more people, and, you know, could be one of the best payouts. But, you know, again, it's all on the back end. With the 4% pref. So
well, the last thing I'll add real fast too is it is a longer term deal. So it's we're looking for 4 to 5 years. So expect a 5-year basically hold of your initial investment. So again, if you're looking to get that money back very quickly within the next year or two, probably not the right deal for you. But for those of you wanting to set it and forget it, truly passive, great returns, this is perfect. So just wanted to mention that last thing, Chris.
absolutely. And Stephen, if you could hit up, there's 2 questions in the private Q&As, one from Christy, one from Anonymous. One person wants to set up their infinite banking policy. So if you could maybe give them the pathway for that. And Christy is in the business of velocity banking and looking to, you know, refer people over to us. So maybe you could help kind of connect those two. And another cool thing here is I don't know if I've ever done that where I've asked everybody to kind of let us know what it is you want to learn about. But like the cool part is when I read through all the things everybody said, Janet, you know, the one we just covered with the fund, was the only one that was outside of what everybody else is asking for. We got one person here asking about how to access funding for their business. Okay, well, that's coming very soon. So what you'd want to do is get into privatemoneyclub.com. I put the link up in there, but you know, you want to definitely create it, because just today, we've been waiting for this forever. We posted and launched the public forum. So the person looking to raise money for their business in the forum is, as a free member, you can go in there and you can just put up what it is you've got, what it is you're looking for, and you could build some relationships. That's the whole point of Private Money Club. It's a community of people with money and people that need money. So sounds like you're the person that needs money. So get in Private Money Club, and then, you know, you're not going to be able to post your deal like the premier members would, but as a free member, you can actually go in there and you'll be able to, and I just put the link for Private Money Club, you'll be able to post that in the forum, as long as it's not an investment or an SEC type of thing that would need to be registered. If it's just, you're just looking for some opportunities with your business, maybe that's the way to do it. So you can definitely go in there, and that's how you do that.
Breaking news, this just in. Are you sick of having your money lying around not doing anything? Well, we've got the solution for you. privatemoneyclub.com. Back to you, Chris.
But a lot of the other questions kind of all came around the infinite banking concept, and I loved it. So I want to kind of dive in here. You know, a lot of people are, you know, Matt Davis said how to develop the right financial mindset to pay down debts, budgets, and achieve full financial independence. So I'd like to take just a few moments talking about debt pay down. And this is such an important topic. Matt's not the only one that commented in about this being what they wanted to learn, because I'll tell you this right now. If any of you are in debt and you feel like you're a slave to your debt, you know, you work harder and harder, it just never seems like you're never able to pay it down. You almost feel hopeless. A lot of people, you know, will start thinking, oh, I'm just going to go bankrupt. A lot of people will just feel like there's no way out and this is just life and it's just going to suck. I've been there. Trust me. But I can tell you there's a very smooth, I'm not going to say it's easy, but it is easy because you just follow the steps. Okay, process to getting yourself out of debt. The downside is it's not going to be quick. It's going to be way quicker than trying to do it the way you are with making extra payments to principal on the credit cards. That, I know a lot of people say that's how you do it, and it is, but there's more of a method to doing that. And I'd love to walk you through that, Matt. So let me start with that. And really, I'm just going to do it all from the whiteboard. So I'm just going to put myself up here as a speaker so you guys can actually see the board a little bit clearer here. And so when we record this and you guys see it, you can go from there. So if I pull up a diagram, and I'm only going to do debts for this one. So let's just talk about debts here. Now, I don't know what your debts look like, but the majority of people have credit card debts. They have car loans. Maybe you got some debts on the cell phone and all those gadgets you bought. Maybe a home remodel loan. Maybe you bought some equipment. None of this matters, but just know that you've got your debts. And these debts are costing you monthly interest and principal. Every one of these is costing you money. So let's just put some numbers to this. Let's just say whatever this equipment is $100 a month, and that's 7% interest. Okay, let's say your remodel loan, it's a variable loan, so you're at 9%. So let's just say that's $200 a month at 9%. Okay, and then you got your cell phone. Let's just say that's, gosh, it's sad to say they're about $100. But let's just say that's 0%. So most of you would be like, it's 0%. I don't even want to worry about it. But no, you got to worry about it. You got a car loan. Let's just say that's $500 a month at 5%. And credit cards, let's just say that's another $300 a month. And then that's probably, I don't know, most credit cards nowadays are at least 25%. I've been hearing 30 a lot. So let's just kind of just do the math real quick. Because what I want to do here is see how much you're bleeding. So we've got 1, 2, 3, 4, 5 different debts. First one is 7%. Next one's 9%. Next one's 0. Next one's 5%. And the credit cards are 25%. So that's 46% combined. 1, 2, 3, 4, 5 divided by 5. So our average rate of return, even factoring in the 0, is 9.2%. 9.2%. That's how much money you're giving away. But the real problem that hurts American families, probably all families in any country, but we're just going to talk about America here, 500 plus 300, is this. You're paying $1,200 every single month. So before you do anything for your family, before you buy food, groceries, rent, your basic expenses to live, you got to overcome $1,200 a month. Now, that is a mindset that's hard to overcome because sometimes you just want to give up. You just don't know the pathway. And here's the hard part. In order to get rid of all of this, we've got to follow some simple rules. First, you have to be saving some money. So if you're doing a budget and you've got income coming in from your household, you got to subtract out what all your expenses are, the minimum payments. Now, one thing I do want you to do is on those credit cards, I'm just going to draw a really hard line here. On the credit cards, I want you to figure out your credit card payments, bare minimum payment. Don't do like, oh, I do the minimum plus I add $300. Hold on a second. I want you to think of the extra money that you're giving the credit cards. I want you to call that savings for right now. Fair enough? So let's just say when you add it all up, you're saving $1,000 a month. And whether this is your number or not, it doesn't matter. I'm just using it for simple math. If you're saving $1,000 a month, all we normally would suggest is you change where that 1,000 goes first. And you're going to put it into a specially designed whole life that will build for you. Okay. And the reason you're going to do this, because a lot of people are like, well, why wouldn't I just put it into the bank account and then do it that way, which you could. Okay. The infinite banking concept does not have to have the policy there. But let me ask you this question. If you put it into the bank account and we just do the infinite banking concept, paying debts down with this, which would work, does the bank pay you money? Let's just say you get this up to, I don't know, 3,000 every quarter. Okay. You got 3,000 in there. And if we take 3,000 out to pay down those credit cards, does the bank pay you interest on $3,000? No, because you took the money out, right? But if we just change where the money goes first and we put 3,000 over 3 months into the policy and we take the $3,000, well, let's just say we take 2,000 of it out. Okay, I'm just want to try to be real because in the early first year, 2 years, you're not going to be able to take all of what you put in. It's going to be 60 to 90%. So we take 2,000 out. So most of you are like, well, that doesn't make sense because I can only use, a certain percentage of it. It's probably more like 2,400. I take 2,400 of the 3,000 out. But here's the deal. You still have $3,000 in your account earning interest. And right now, most of the policies we're writing are 5.2 to 5.6% with dividend. That's what they're paying you with dividend. Gross. Okay. There's costs, of insurance that comes out of that. Right there, you've got a way for your money for the rest of your life to earn interest and dividends, whether or not you take it out and pay off debt or not. Now, I understand a lot of people when we show them this, if you're a short-term thinker, this is the mindset, Matt. If you're a short-term thinker, this isn't going to pencil. Okay, if you're like, oh, it doesn't make sense in the short term. No, it's not going to, because this is a long-term thing, but it's going to solve your short-term problems. But really the reason you do this is because I don't know if you understand the compounding of money, over time, but it's the most powerful thing there is when it comes to financials. It is. And Albert Einstein said it. He said, those that understand compound interest earn it, those that don't pay it. You got to get on the side where you're earning it. So by putting the money in here, number one, we are able to earn uninterrupted compound interest. Number two, if you have a family, there's going to be a death benefit, okay, that's going to be on the policy. So you've covered some of that to protect your family. Whatever you earn on this side is tax-free. And in light of everything that's happening right now with banks, do you really even trust putting a lot of money in banks anymore? Because I don't. I never have, but now more than ever, I'm just like, you know what? Poo-poo the banks. They can just do what they're doing. They're risky business for me. So I want to create my own banking system. You're saving money over here, and we got these debts over here. One of the things you have to do, and I'm just going to write it here for your debts, you have to do what Dave Ramsey teaches. I don't know if he came up with it, but we want to put those debts from lowest to highest balance. Okay, so lowest to highest. Forget about the interest rate. I do not want you to put it from highest interest rate to lowest. I want you to put it from lowest balance to highest balance. And the reason for this is, number one, there's a dopamine hit when we pay off small credit cards. Number two, it allows us to recycle and recapture money faster and at a higher velocity. So let's just pretend that this $300 of debt, okay, right down here, consists of 3 credit cards. One is, I don't know, $1,000. That's the lowest. One's $2,000 and one's $5,000. I'm just making numbers up here, folks, but just stay with me. These are your debts. This credit card up here at $1,000 is only 5%. You got yourself a good one. This one is 29%. So now see how that mindset makes you want to think, I want to pay off the high interest rate first, not the low interest rate. Wrong. You want to pay the low balance off, not the high interest rate. And we'll do 15 here. So what we're going to do is we're going to save the money here. And when you save money into this specially designed whole life, the money is available immediately in the first 30 days. So if you were to save $1,000 and our first credit card is $1,000, it really would only take about 2 months. So in month 2, you could take a loan, and let's just do it for $1,000. So you put $2,000 in and you take $1,000 out. And what we're going to do is we're going to pay off this first credit card. Now, let's say this first credit card was costing you, let's just do $80. Now that this first credit card's paid off, a lot of people stop there, but that is not the infinite banking concept. The infinite banking concept is a circle. You've all seen me draw this. Okay. It's a big circle, and we want our money to start on the left side of the circle, move over to the right, which we're focusing right now on credit cards. And then once it goes to the right side, we would then want to take that money and move it back over to the left side so that you're in full control of the money. And I also didn't get into too much. When you took the loan, the insurance company charges you interest on that money. We'll just call it 5% for simple math right now. All the companies are a little different. So in between what the policy is paying you and what you're charged on the loan is a spread. It takes a couple of years to hit a positive spread. Most of the policies are 3 years. So you got to wait 3 years to get a positive spread. Again, if that's a problem, then don't do this. But over here now, we've paid off the first credit card in 2 months. Great. You got $80 that you freed up. We're not going to pretend that $80 doesn't exist. The mindset would say, I got now $80 to go out and do fun stuff like get Starbucks, go out to eat. Wrong. You still got to live like a hermit here for a little bit if you want this to work. We're going to take that $80. We're going to set up an automatic bill pay for $80, and we're going to make sure that money makes it back into the policy as a loan repayment. Now you got an extra $80 every single month building up. What we'd actually do in a debt repayment is we'd actually take that $80 and we'd put it over here into a segregated bank account, which is just a second bank account you set up. So forget about what I said about the loan repayment for 2 seconds. We'll come back to that. I don't want you to think we're going to skip that piece, but I do want to right now just pay off all the debts. $80 is coming back. So now you keep saving $1,000. So the next month you got $3,000 in there, and the next month you got $4,000. So we got $4,000 in there now. $1,000 was already taken out. The next credit card's $2,000. So now what we do is we take another loan. So loan number 2, this is 4 months later for $2,000. So this is number 1, this is number 2, and we pay this second credit card off. And this second credit card was charging you, let's just say $120 a month, $2,000 at 15%. So now that's gone. Now what we're going to do is, again, not going to go below this 120. We're going to add the 120 to the $80. So now you've got $200 a month coming over here. So now it's not $80 a month, it's $200 a month. So now what we got to do is we got to pay this $5,000 off. We've put 4 in, we've taken 3 out. Now you keep saving. So now the next month you put 5,000, now you got 5,000 earning interest. Okay, the next month you put another 1,000 in, you got 6,000 earning interest. You already took 3 out. So now, but what we forgot is down here, we've been saving $200. So 2, 4, 6, 8, I don't know, let's just do, we got probably $1,000 that's been saved here. This 1,000 that's been saved is not new money that you had to save. This 1,000 is the money that you were giving away to these 2 credit cards every month. You stopped giving that away and you started paying that back to yourself by recycling and recapturing money you were giving away. So now we just take another loan out. So let's just say we take a loan for $4,000 here. Okay, that's loan number 3, and we got 1,000 there. That's 5,000. So if we combine these 2, we can pay that big one off. That's 29. So now we add another $100 because we were paying $300 a month. So $100 now is $300. And now you got $300 a month being saved over here. Not new money. This is money you used to give away. So this is how velocity works. Now, Christy is in velocity banking. This is what they do. They show how to use velocity in your favor. Banks do this every day. And since we teach you how to be your own bank, I'm literally showing you how to put velocity back in your favor, but I'm showing you how to do it by still making a spread on your money without ever interrupting it. So again, you're taking that money out. You can see we're putting money in and we're taking money out. My math might be off because I was doing that quick. But while we took the money out, we didn't take our money. We took the insurance company's death benefit that they promised to pay when we were going to die. The insurance company loaned us that death benefit at a rate of 5 or whatever the interest rate is the insurance company's charging. That loan against the death benefit really never needs to be paid back. We're going to pay it back, but it doesn't need to be paid back anytime soon. They'll never ask you for that money back because they got to pay it out someday anyway. Someday you're going to die. Therefore, the insurance company, when they make loans against the death benefit, unlike a loan from a credit card or a loan for a car, they want their money back. The insurance company actually doesn't want the money back. They actually just want the interest on the money, to be quite honest, but we don't want to pay them that 5% interest or whatever they charge. We want to make sure we eventually pay the loans back. But for now, we're just trying to pay off the high interest rate debt. So now you can see all your credit cards are gone. You no longer owe the money to the credit cards. We paid all that off. You're still saving money. You're still saving money here because you're recapturing the 300. So the next thing we would do is we would come over and we'd look at the next debt. Okay. And now you can kind of sit there and you can say, okay, which one can I afford to pay off? Let's just say this one here. Let's say it's a $3,000 loan and you're paying 9% interest and it's $200 a month. So what we're now doing is we're going to just repeat the process. We're going to take another loan for $2,000 because you've saved money for a couple of months. We're going to take the money that you were saving, which is now $300 a month. We're going to combine the two and we're going to pay this off. See how fast this is going? Faster and faster because you now have money working for you that you didn't have working for you the first time. This is the hardest part, the savings, because this is money you got to trade hours for dollars for. This is gravy money. This is money that you were just giving away anyway. So now you're taking that money back. You see how simple this is? And we just keep taking this back and we keep redeploying that back out. We pay this loan off. We recapture the 200 there. Now you're saving $500. Then same thing. We pay this loan off. Okay, now you got $600 that you're recapturing of over time. And again, it just keeps compounding and compounding and compounding. You keep building it up and it's happening faster and faster and faster. And eventually you pay the cell phone loan off, which that would probably be one of the last ones I'd pay off because it was 0%. But don't focus on the zero. Focus on, can I get $100 back in my velocity chain faster? So you take the $100 back. Now you're at $700. Now the last one you got left is your car. So eventually at $700 a month plus the $1,000 a month you're saving, it's not going to take long to pay off that car. Last one, you pay the car off. And now you got $500 extra dollars. So now you're saving $1,200 a month, which is the same as you going out earning 9.2% on your money, but you didn't have to take any risk for doing that. So now you got $1,200 a month. That money's coming into this segregated account. Since all of our debts are gone, you are completely debt-free. We now want to redirect this $1,200 back to pay the loan off. Because why are we going to pay the insurance company 5% when the bank's sitting holding our money? You wouldn't. So you just take $1,200 a month as it comes in. You sweep it over here. We do all this for you. We build the map to show you how to do this. We help you set up the loan repayments back to the policy. This is how you're going to pay debt off. Now, there was nothing about what I just showed you that happened overnight, but it did happen pretty freaking fast. But you first had to be able to save money to make this whole thing work. Second, you had to have the right mindset to want to get out of debt. You had to have the right consistent and persistent attitude to not just go and blow this money when you were recapturing. Because remember, that money's going into a bank account. That's why we always do a separate bank account, because we don't want you to go out and be like, oh, bad things happened, this happened, and that happened. Because every month you'll come up with an excuse as to why there's no money left in your bank account. True or true? There's never any money left in a bank account. It's kind of like a sick game we all play. Our bank account, like the main bank account we pay our bills from, at the end of the month, there's never anything left in it. Okay, that's not like some sick game. It's you just don't know how to manage money, and most people don't. But by putting it in a separate bank account, you no longer have to manage money. You just have to not touch this unless it's for the purpose. And when it's in a separate bank, I would even suggest doing it to a separate bank altogether. And don't get a debit card. Those things are evil. And just get checks, but don't write checks. Because when you got to write a check, you're like, if I buy this or I spend this money on something, it's going to take me longer to pay this off. And you'll remember the pain and the debt slavery feeling that you had and how close you are. So you got to be conditioned enough to do this.
Just a lot of comments that this is, what they were looking to learn. So very good.
So one thing I could do really quick, Mark Hall, you're asking about complex trusts. I definitely can teach on this now. I'm doing it. I've been doing it now for a little while. So the only thing I don't want to do is complex trusts can be very complex. And they're probably only going to apply to a very small fraction. So before I teach complex trust, is your federal income tax bill north of 100,000, and has it been north of 100,000 in the last 2 years? So in other words, when you get to tax time and you get your final tax returns, are you paying more than $100,000 a year to the federal government? Doing a complex trust structure would require somebody to be paying about that in federal income tax for it to really make sense. I want you to understand how it works. So I'll just do mine, okay? I've got a lot of companies, but I'm just going to give you a couple of them, okay? So all these little rectangles, these represent my different entities that I own. Okay, these are all my companies today that I own. Now, the goal with the complex trust structure is to basically make it so that I don't own anything, but I control everything. Fair enough? I own nothing, but I control everything. So what we first do is we set up a new company, and we're just going to call this our operating company. And this operating company is going to own nothing, but I'm going to control everything in it. And then what we're going to do is we're going to go to all these other LLCs, and we're going to take these all down to about a 1% ownership. So Chris Naugle owns 1% of all these companies. And you're probably thinking, well, who owns the rest? The operating company owns the rest. So if I'm, let's say I'm 50% owner in this one, let's say I'm 60% here, the difference, 49%, 59%. So whatever the difference is, this ownership goes to this operating company. Follow that? Okay, so let's say this one's 99% operating company. So now an entity owns all these other entities. Fair enough? This company is just meant to kind of have all the incomes come into it and to operate. I can do lots of things with this, but let's forget about that. Complex trust structure is the next thing. So from this operating company, this is where I would take the income I need. Now, this is very important. The income I need. Now, what income do you need to live? Think about that. Not how much income do you make, not how much income do you want, how much income do you actually need to live your life? Well, you got to buy groceries, got to buy diapers, got utilities, water bill, gas for the truck, all those other things, right? So you figure out what all those things are you need. But you see, what happens when you no longer, out of your income, have to pay for your mortgage? What happens that your income no longer has to pay for your children's private school? What happens when your income no longer has to pay for your specially designed whole life policies and all the money going into them? This income goes down drastically. You don't need as much money. You just need basic essentials. When you set up your complex trust structure, the whole idea is I want you to envision this kind of like this is a dial. Think of a guitar amp, right? This is the volume. And if you want to go louder, you just turn it up. And if you want to be quieter, you turn it down. But think of your income being the same way. It doesn't matter how much money you make. Let's just say your total income is $3 million. Now, first off, if any of you, are making $3 million, the first thing I already know is you don't like the tax man. You hate doing your taxes at the end of the year because you're getting screwed. How do I know? Well, the numbers are numbers, all right? But let's just say that's what you're making. You don't want to pay tax on that. You don't need all that money. Some of you are like, oh, I could spend $3 million. Sure, you could. So could I. But you need to. And if you could spend it, do you have to? No, you just want to. So let me show you how to spend $3 million without having to pay tax on $3 million. See, I only have to pay tax on the amount that I choose. And I can choose this every month. I can make it different. Like this month, I took $5 grand. Okay, next month, I might take 15 grand. Whatever I need that month, I write myself a distribution check from this operating company. And all the income from all these different companies flows into here. So I just write a check. And the only income I have to pay tax on is that. Whatever I take, whatever I need. But what I don't need, see, the next step is this company flows into what's called a business trust. And this is not a statutory trust. This is a federal trust. Okay, that's very important. So this is an irrevocable trust. What irrevocable means is any dollars or any assets that go into this trust can never come out. Pay attention. Whatever money I put in here, I can never get it back out. But it doesn't mean that I don't control it. I just can't take it back out. But why would I need to take it back out? Well, I might want to take it back out because I want to buy real estate. The business trust can buy real estate. Okay, the business trust can go out and buy multifamilies. The business trust can invest in private notes. The business trust can lend money. The business trust can do everything that I can do. So now if all the things that I would need money for to invest and to build my wealth can all be done inside the business trust, why would it matter if I can't take it back out? I'm just trying to build it, right? Let's go to the next one. The business trust in a complex trust structure is set up for one sole purpose. It is set up to benefit my family trust. Now, what is my family trust? It's kind of just like it sounds. It's another federal trust. It's an irrevocable trust, which means anything that goes into it can never, ever come out of it. Okay, which scares a lot of people, like, oh, I don't want that. Oh, no. What do you need those things for? If you control everything, why do you have to say, oh, it's mine, mine? It's still yours. You control everything in the business trust. You control everything in the family trust. So you know what my family trust owns? My primary residence. I don't own my primary residence. If someone sued me and said, I want to take your big old house out there in Spalding Lake, go ahead. You can't. I can't even get it. Damn, the stupid trust thing owns it. I don't have any rights. I don't even pay for the stupid house. You know what? The family trust pays the mortgage on it, pays for the upgrades, that new pool that I just put in the backyard that's still, that'll be done this summer, Stephen. You got to come down and go swimming. That pool, I didn't pay for that. The family trust paid for that. Well, how did the family trust get money? Well, any of the money that went from the operating company into the business trust, anything that I didn't use in the business trust to buy real estate, to make loans, to do private funds or anything else, I just send that money to the family trust. And that family trust pays for my living, my house. It doesn't pay the utilities or any of that, but it pays for the maintenance and the upkeep. It pays for the pool house and the pool. It pays for all that stuff. And it also pays for Vivi's private school, because Vivi can't go to public school. We won't go there, but it pays for Vivi's private school. All right. So Vivi can go to any private school and it's all paid out of the family trust. Now, at the end of the year or throughout the year, I'm a very giving person. I donate a ton of money, and I donate to a lot of different places. I donated it to this one kid's charity. He's on a mission to do some things. I donate a lot to 10 Lives Clubs for kitty cats. I donate to a lot of people, Make-A-Wish, and I write donations. And all I did is the family trust. So remember, the business trust was set up for the benefit of the family trust. Family trust was set up for the benefit of the Naugle Foundation. Because if I'm going to give money and I'm going to donate money, well, why don't I just create a foundation where other people could donate money to my foundation, or I could donate money? So remember, the only income so far out of all of that 3 million is whatever I decide to take out. So let's just say I take out 250,000 of $300 or $3 million. $250,000 is all I'm paying tax on. That's it. Oh, well, how come you don't have to pay tax on the rest of this? Well, because the rest of this went from the operating company to the business trust. Business trust did all sorts of investments. From the business trust, whatever wasn't used there, we sent to the family trust to make sure that my house was paid for, the private school, because I don't own my house. So the family trust owns the house. And if the house goes up in value, great. The family trust benefits. If the house goes down in value, family trust, they don't. And my daughter schooling is in there. And anything I don't use here then goes to my foundation. And my foundation requires me to donate, and I think it's a little less, but let's just say I use 10%, because that's just my rule. I donate at least 10% of what's in the family foundation. And that money's gone forever, right? That money went out and that did a good thing and solved somebody else's problem. But a lot of money ends up piling up in the foundation. So what does the foundation do? Well, if you know of the Gates Foundation, you'll remember a time where Buffett donated his entire net worth to the Gates Foundation. And the Gates Foundation gladly took all of Warren Buffett's money. And because Bill Gates controlled the foundation, Bill Gates said, I need to find a good investment for this money, because the more we grow the foundation's money, the more good things we can do with that money. So I'm going to invest that money in a company called Berkshire Hathaway. Who owns Berkshire Hathaway, folks? Warren Buffett. Now you get the drift. So I can invest this Naugle Foundation money pretty much any way that is fitting and suiting, okay, based on our investment philosophy. I could even lend this money back up. So I can make loans of money from my foundation back to the operating company, and then I could repeat the process. And then the operating company could then pay interest back to the Naugle Foundation. Do you see what happened there? I own nothing. Well, I do. I own 1% of these companies. Whip-de-doo. You can just take the 1%. I could care less. But I control everything that happens in every one of these buckets. And because I control everything, I can invest in anything that every one of you want to, and I can get passive income. Yeah, I can't ever take the money out, but why the heck would I want to take the money out? I mean, what's the point? I just don't want to pay tax on it. I only want to pay tax on my share. What is my share? Whatever I turn the dial to, whatever I want my share to be. Because I don't need 3 million. I might only need 250. 1 year, I might only need 150. 1 year, I might need 450. I don't know why I would, but this can be anything I want it to be. So hopefully that helps. And I probably didn't do it real good justice, but I wanted to help you understand a complex trust structure.
Just real fast on that. Chris was just asking, there's like you had a lady on and like a scaled down version of that, like
Yes.
something a little bit above like a revocable living trust.
So
but
here, you can scale that all down. Remember the operating company? Maybe you've only got 1 or 2 LLCs. You can flow those into the operating, and then you can set up a business trust, and you could set up a family trust, and you could just skip the foundation. So this would be a much shorter, simpler. So you can kind of just skip it all down. Now, is it as advantageous? No, but it still gets the job done. And it still does a lot of what I just showed you. Heck, you could even do it with, I think, with just the business trust. So there's lots of ways to scale it back and do it. And because that structure I just showed you, folks, that cost me $95,000 to set up. Most people would be like, oh, that's stupid. Listen, if you saw my tax bill last year, you wouldn't say that's stupid, because my tax bill was a lot more than it cost to set up the trust structure. So all I had to do is take some of the money I would have normally given the government, spend it on setting up the proper structure. And now all of a sudden I control the narrative and I control everything. I mean, you've heard this before. The Rockefellers always say it. It's famous. Own nothing but control everything. That's what they're talking about. So yes, there's stripped down versions, and we have people that can help you with that. I mean, Wealth Builder Group is who did all mine. I work with another guy who's phenomenal. Wealth Builder Group really wants people with 200,000 or more in federal income tax bills. This other guy, JP, and his group, they're just phenomenal. He started the same way. He sold his big manufacturing company, and he started with Solomon and Wealth Builders Group. And then he said, hey, I can do this and help people at a lower level, so he can help them. And it's a lot less than $95,000 to set the structure up. So I'm happy to help anybody and get them in contact with JP or with Wealth Builders Group. And no, we do not offer trust creation services. I just showed you that, not trying to sell something. It's just what I do. It's what I did. I paid to set that up. But we work with these companies, and if you want, a referral over to them, happy to do that. And just throw them my name when you go over there and say, Chris sent you. Yeah, I'll put JP's info there. And they do everything for you as well. So both of those companies, what I like is you can get an attorney to set up the complex trust structure, but it's not the trust structure that you really need to be careful with. It's the management of the trust structure. So one thing that I will forever say Wealth Builders Group is phenomenal at is they do everything. My bookkeeper works directly with them. They do all my tax prep. They do all my tax planning. They do all my tax returns at the end of the year. Every time I do stuff, I can bounce them off them if I don't know if I'm doing it right. If I screw something up, they'll go back and fix it or try to fix it if I don't screw it up too bad. So it's full management, which is why it's so expensive. Okay, JP also does that at different levels. So there's JP's number, his name, his company, and all that. Can that happen with W-2? No, you wouldn't do that you wouldn't go through the trouble of setting that kind of a structure up if you were a W-2 earner, because unfortunately, and I hate to say this, W-2 earners, I know banks love you and they want to give you money because, that's just what they want is W-2, but W-2 earners get screwed so badly from a tax standpoint because you really have no options. So you really got to, anyone that's if your only income's W-2, my suggestion would be try to find a business that like and understand, create your own company, your own entity, preferably an LLC of sorts, and start building that alongside of your W-2 income, because you're pretty screwed and trapped when your only income is W-2. There's so few deductions you can get. But once you start your company, it opens a whole nother world for you. W-9 for sure. Yeah, that's 1099 income. Yeah. So John, let's see. I work with Abundance Group. Yep. So there's several groups out there that do that. I'm not saying mine's the best. It's just who I work with, and it's who I trust and who I use. Can the minimized complex trust work with W-2 income? Yes. Set up a call with JP. I'm not a trust expert. I'm sorry, folks. I just know because I do it, but I'm not going to hold myself out as being a trust expert. Call JP and he can let you know on that. W-2 employees. Yeah. So there you go. You can own your own entity. Can afford $9,000 a year. Okay. Like to become a lender. So Robin wants to become a lender. There's no better place to become a lender than on Private Money Club. Just no better place. And I don't mean to say that just because we created it, but we literally created something that has never been created before. So if you're a lender, this is where you want to be. This is literally like a child walking into a giant toy store in New York City that has 3 levels of Baby Shark. This is that toy store for us. My daughter, if I walked into a toy store and it was a Baby Shark toy store, I don't know whether she would cry or giggle, or I don't even know what would happen. I mean, it would just be an emotional explosion of excitement. Well, That's what Private Money Club is for all of you. It's an emotional explosion. Here is the new public forum. And this is pretty cool. So the public forum, you can go in and you can put anything you want. So I could come in here and I could put in a new topic. Let's just say I have a unique real estate deal that can make you up to 40%. And then you could put the description down here and you could basically do that. And then you could even go in and you could attach files. So you could select whatever files you want to attach and put them up. And I could post this deal and it will go up in the forum. So the forum is just like any other forum. You know, it's basically going to just show up to everyone, paid and free members. Okay, so it's just it's a better way for us to allow our members to communicate. And then the premier members, you know, that are going to go in there. Sorry, I got a lot of windows open here right now. My computer is clearly struggling to get through things, but you know, we got a lot of members that, you know, premier and free members, and hey, this just gives you the ability to go in and communicate with them all. So it's something we just launched today. We've been testing it forever, so there should be no bugs on it. I mean, if there's bugs, I'm going to be pissed because it took us months to create this forum here. But yeah, so go in and check that out and you know, use it. And that'd be a place where you can go in and be a lender. Matt said, what YouTube videos can I check out about structuring and setting up a business? I don't really have any videos about structuring, setting up a business. I mean, we've done those.
Probably just talk with Prime.
Yeah, we'll just, Matt, I would just put you in contact with Prime Corporate, you know, Services, and we've actually got a relationship. So any of you that want an LLC or want to set up an entity, we built a relationship with Prime and for Private Money Club solely, but you can just tell them it's for that. And they will set up an LLC for you, an entity for you at just the cost of state registration and the hard cost for the operating agreement. So it's anywhere between like $440 and $600 to set up your entity in whatever state you want to set it up in. So, you know, I'll have Stephen put the link up there for Prime. You know, it's pretty much, they're doing it at zero cost on their end, just to kind of build the relationship. So that would be what I'd suggest. Can you tell us how things are going with your loaning money to people who flip equipment? Oh, so Sam's asking about, you guys don't know it yet, but write this down and I'll put it in the chat right now. It's not up yet, but we've got a new website, Be Your Own Bank. So it's not a hard one, or Be Your Own Banker. We have both of them. So Be Your Own Bank. And on there really soon, we're going to have a video. This site's going to be just like it sounds. If somebody says, well, what is being your own bank? They can go to Be Your Own Bank or Be Your Own Banker. And on there, I'm going to put up all my case studies. I'm going to show you all the different things I do with my private banking system. And the most current one that I just did is, you know, I stumbled upon this by accident. This company locally called United Lift. And they called me up. He watches all my videos and he wanted me to sit down with him and his partner about setting up private banking policies for them, which they're doing $100,000 policies each. But in that, you know, I started talking about their business model and, you know, they're like, well, we, you know, my partner here is an expert at finding used equipment. So we buy used lifts and they pretty much just do lifts. And then we bring them in and we do the refurbishing. We literally flip equipment. And I'm like, you flip equipment? And then I just like, well, listen, I'm a numbers guy. What does that look like? He's like, well, sometimes we buy the lifts for 12,000, 15,000. We put 5-6 grand in them and we sell them for 35. I'm like, you do what? And I'm like, how long does this take? And he starts showing me photos of their factory. They got a whole 40,000 square foot, like assembly line process of this. And the video, it shows me going there with the film crew. And like, we walk through and we see everything. It's wild. Like how they paint the units, how they clean them up, how they put new tires on them, new seats on them, how they go through and they take a used forklift. And I swear to you, when you see the final product in this video, you will not know the difference that it was a used piece of equipment. At first, it's all banged up and beat up, and I'm like, this thing's beat up. Like I bought one, and it was a beat up mess. And I think I did an Instagram video on this. The finished product, I swear I didn't think it was mine. I'm like, you guys are pulling the wool over me. You guys are showing me a brand new lift, and this isn't the one. And he says, look at your invoice. What's the serial number? And he shows me the serial number, and I compare it to the one that was all refurbished. It was the used lift. It looked brand new. Sold it for 39 grand. I didn't do the return yet. I just did the video. I made like $4,600 and my amount in was like 31. So I made 4,600 divided into 31,000. I made 14.8%, but I did that in 2 months. So I bought the equipment. They basically kept it at their facility, refurbished the whole thing. They found the buyer for it. I paid their sales commission to their guy who found the buyer. You know, it was very fair. And I still made that. So how did it go? Good. I want my next one. The problem is, you know, I put that video up and I sent a couple other people over there because, hey, why not share the wealth? Now I got to wait for my next piece of equipment. Because I asked him, I said, hey, you got another one? He's like, we will, but we got this guy you sent over and that guy you sent over. We got him in this lift and that guy in this lift. I'm like, man, I just shot myself in the foot. So yeah, some of you that are taking advantage of that, thanks for putting me down the line on the list. Let's see, Rosie got insurance at 64. Yeah, we just got somebody issued in the late 70s. So when people tell me they're too old, they're not too old. Like to become a lender. Yep. So there you go, Robin. So hopefully you got that. Private Money Club would be the place to go to do that. Better to do lump sum deposit every year or monthly deposits. It depends on your circumstances. So Rosie's talking about the policies. The best policies we're designing right now are ones that have a lump, like a dump in year one, and then, you know, a set amount per year or per month. So like, let's say somebody dumps in 100 grand in the first year, they just have that money sitting in a bank account, and then they put in 12 grand a year or $1,000 a month. That's the optimum design that we're doing right now. The only time that doesn't work so well is when people are over, 65, it gets difficult for that, because to buy the dump in creates the need for more term insurance and it gets expensive. You know, unless you're over 65, yeah, that would be the optimum strategy to use. What about if I open up an account under my son, 41 in April? Yeah, Rosie, that would work. Rosie, the only thing that would be hard, your son's 41. Yeah, definitely. That would be the suggestion. So have your son be the insured and Rosie, you're the owner. And just like I was talking about, own nothing, but control everything. So you can own the policy, you can fund the policy, and you don't have to be the insured. Your son can be the insured because you have an insurable interest. So that wouldn't be a bad way to do it at all if he'd be open for it. And that would be a screaming policy at 41 years old. Let's see, 1035 forms have finally all been submitted and just waiting for the check to clear at this point. Fantastic. Yeah, 1035s can take a while. You're welcome, Rosie. What is the contact for the equipment refurbish?
Got to be in PMC. Go find it in the public forum.
Oh yeah, how about that? Good idea. So I'm going to make you guys do a little bit of work. I'm not going to make it that easy. So Steve or anybody else that wants to know about the equipment financing, I'll actually, that'll be my next thing I do when this webinar is over. I'll put all the contact information for the equipment. We'll call it flipping equipment. And you just have to go into Private Money Club, create your profile, and then just go to the forum and boom, there it is. Good thinking, Stephen. Good thinking. All right. And while I've still got the 96 of you, most important thing of the day. I don't know what your plans are April 28th and 29th, but I'm going to tell you what your plans are from here on out. You are going to join us in Utah for what we're calling the Money Tank event, because it is going to be freaking epic. The VIP tickets sold out right away, but this is where you're going April 28th and 29th. Don't you give me any excuses. You got this to do, that to do. I'm giving you plenty of notice. You're going to come out, you're going to join us for this event. $697. Stephen, is there any kind of thing I can give them? Any kind of discount code I can give them for this one or no?
Yeah, we can do a discount. I mean,
all right. So
if you guys all stuck with us to this point, yeah, let's do it.
Yeah, what the hell?
Just the easiest one I know is Snaggy 50. I'll put it in the box. That's the only one I know.
Yeah, so put the whole thing there. So folks, we're going to give you a discount on these tickets just because you joined us today, but you got to use it. Do not let this go. So there's the links. There's the discount code. And what does your discount code give them? 50% off?
Yeah.
Yeah. Wow. All right. So there's the link. We're giving you 50% off right now. And all you got to do is just when you get into the checkout, just put in this discount code. And that is what will get you the 50% off. So that is my ask for all of you. We do this live every single week. And I see all of you on a screen. I see a name. I talk to you. I act like I kind of know you, but I don't know you. And when me and Stephen were out in Secret Knock this past week in California, we got to shake hands, hug people that we'd never met before. They're like, oh my God, we're on every week. You know, we never met. And it's the coolest freaking thing. So please come out and shake my hand, shake Stephen's hand, give Shauna a hug. She's a crier. And just make this real so that it's not just virtual. And do that by joining us at this event in Salt Lake City. It's a very easy airport to fly in and out of. And you can be part of what will be and go down in history as the very first Money Tank event. And you can say, I went to that first one, because I can say something that none of you probably can. I went to the very first 10X, Grant Cardone 10X, and it was the most moving, powerful event I ever went to. But it was so powerful because it was his first event. And there was a whole nother dynamic to that event because it was his first. This is our first, and this will go down as being the most special one. So get your tickets. We got lots of hotel info, Mary. We can help you out with that. We got it all dialed in. We know where all the good hotels are right around it, so we can hook you up with that. You can get a hold of Shauna for that. But for right now, just get yourself the ticket, and we'll worry about the rest after the fact. So with that being said, holy cow, a lot of people jumped in on that. So let me just put it one more time here. So give you a second here, copy and paste that, because we are about to wrap today's wealth webinar, and I want to make sure you guys have the access to that. So for all of you, thanks for joining us for another week of wealth webinar. And for many of you, we'll see you at 4:30 for the happy hour, where we're going to be able to answer all the questions that we didn't get to here. Till then, see ya. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.